So that's good. That works. Okay. Audio, 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 audio. Hello. Hey, that works great. Start streaming. Here we go. Manage broadcast. We'll get this done. Not made for children. YouTube is creating. Blah blah blah. J Ray, how you doing, J Ray? And Rez, CH, Punisher, Dave, Diago, Sinbad, Simba, how you doing? Stop recording, get this rolling. All right, so we're gonna get started. Here we go. Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, using nothing but pre-qualified dividend stocks, and those, my friends, are companies that have consistently increased their dividends for more than 20 consecutive years. That means a higher and higher dividend every single year. Okay, so I got 5 simple rules, 5 simple criteria. The way this traded, I'm like a loss for words today. The way this strategy came about was my 9-year-old daughter wanted to learn how to do some trading when I was doing my active trading back in the 80s and 90s. Well, no, sorry, the 90s and the 2000s. So in 08, she wanted to do the same thing I was doing. So I had 5 criteria I had to take into consideration. 1, it had to be simple. Remember, she was 9 years old. Had to be simple, safe, predictable, consistent, and no way she could lose money. I know that sounds really strange. No way she can lose money. She's a 9-year-old little girl. Last thing I wanted is for her to cry. Hey, Doc, how's it going? So if my 9-year-old little girl was going to cry, it's going to make Dad feel bad, and then Mom's going to get involved, and then I'm going to be sleeping on the couch, and yeah, that just didn't work for me. So simple, safe, predictable, consistent, and no way she could lose. Okay, so with those 5 criteria, I came up with 5 simple rules. Never buy something you don't want to hold long term. Never sell at a loss. 20 years of increased dividends. Weekly options, and then make sure the numbers worked. But she's a Mensa level genius, Doc. No, come on, Doc. I don't know if you met her or not. She's been on a couple of times. But anyway, besides the point, she was just an average, everyday, regular little 11-year-old. I mean, 12. She started. She started when she was 9. All right. So all that being said, there's no trading today. We saw what happened yesterday. We basically did this last night, so nothing's really changed from last night, but basically all we can do is just go over some more stocks that we want to take a look at. Maybe some interesting strategies. If anybody has any questions, we just go on from there. Other than that, you guys hit me up with a bunch of stocks. I can just go down the list. We can take a look at those. But you guys figure out what we want to do. Now, tomorrow's Friday. It is the last trading day of the first week of the 3rd quarter. Imagine that. We're in the 3rd quarter already. Interesting thing about the first week of the 3rd quarter, it looks very much the same as the first week of the 1st quarter. And it looked very similar to the first week of the 2nd quarter. And guess what? It's going to look the same as the first week of the 4th quarter. It's always the same. Quarter after quarter after quarter, because the same stocks pay dividends every 90 days. Consistently, 90 days, every 90 days they pay these dividends. So those are the stocks I like to look at. Trump lost, sir. I have no idea what that means. So, I the great. Okay, Trump lost. I don't know what it is he lost. I don't know why it should concern me. I don't do politics. All right, so if you could be a little bit more specific, then we'd be able to go on. Other than that, MAGA gang, baby. All right, Gary, let's not do this. I don't want to get into politics. I'm not into it. All right, Evan Cake. Happy 4th of July. Yep, it's my son's birthday today. He's over there celebrating, having fun. What's your list of stocks you watch? Well, I get the Dividend Kings, I get the Dividend Aristocrats, the Dividend Champions, the Dividend Contenders, and then we also have Warren Buffett's list. So that's about 300 stocks that I take a look at actively. Now there's 9,567 stocks we looked at a couple of days ago. So anytime you jump into the stock market, that's your choice. 9,567 stocks you take a look at. Well, I only look at about 300, and I rotate them over and over and over again because I don't have as much money as you think I do. I cannot buy 1,000 shares of every single stock that I like. It just doesn't work that way. So I'll buy 1,000 shares, I'll get my 1%, and I'll move on to the next company. And I just rotate them over and over and over again. Okay, I will buy Macy's 4 times a year. I will buy Nordstrom's 4 times a year. ExxonMobil, I'll buy 4 times a year. Any stock that's on my list that I like, I will continuously look at it, and I will continuously buy it over and over and over again because it just makes sense. You should be watching the fireworks. Yeah, you know what? You get to a certain point and they're all the same. Can you check out stock VA Hand? Never heard of it. VA Hand. What are your stable stocks at this time? Well, you got Macy's, Nordstrom's, Kohl's, AIG, Ford, General Motors. Those are just a few. Vahan. I never heard of Vahan. VAHAN. Yeah, can't even find it. Or how about VHNA? Has no options. That's going to be a no. Can you explain how you input stocks into the Thinkorswim calendar? TXO came through mine. I took a position. TXO. Yeah, TXO is going to be a no for me. That's a no. It has no options. So when I say 20 years of increased dividends and weekly options, it means it's got to have some options. Okay, so how do I put stocks into the calendar? Well, simple enough. I want to open up the go to the watch list up over here, top left-hand corner. Go to the watch list. The very next tab next to it will have the names of all the lists that you have. That's a drop-down window. You click onto that. See that big old drop-down that pops up? Okay. Down towards the bottom, it'll say Create Watch List. Okay, you click on the Create Watch List. And there you have it. You give that watch list a name. All right. We'll say, give it a name. Okay. Whoops. Click on it. Then write, give it a name. There you go. Give it a name. All right. Then you want to import. Okay. Import. Select files. So you have several options of importing your list. One, you can, Gary, sorry, it's AbbVie. All right, Gary, we'll take a look at AbbVie. We looked at AbbVie last night. I'm glad I bought AVGO Option Hunter. Okay. Now, I don't do AVGO. It's over $1,000. That's a no from me. You know what I mean? All right, so when you're importing your list, you can do it a CSV file, cut and paste a CSV file in there, or you can put them individually. Okay, and once you do that, you just hit OK, and then you hit Save. And then once you have them saved, then you come on over to the Market Watch. Okay, the Market Watch is up over here. On the Market Watch, you come down to Calendar. Do you follow TLTW, this and that? All right, once you come there, click on Calendar. There's your calendar right there. You click on this little icon right here. It looks like a sun or a gear, wheel, or whatever. You click on that, And then you come down to your personal, where it says personal, that's your lists. And here's all my lists. 100 euro stocks, calendar spreads, dividend aristocrats, champions, contenders, dividend kings, blah, blah, blah. All my lists that I have. Okay, AVGO is having a 10-to-1 split soon. All right, Gary. I don't do AVGO because, let me think. Hold on a second. Besides the fact that they're over $1,000, AVGO. Okay, AVGO. Wow. Broadcom. All right. So here's the issue, Gary, that I'm having with AVGO. Okay, $1,729. That's the stock price. Let's say, hypothetically speaking, we take that company to the garage sale. What are we going to get? Book value per share, $59.22. $59.22. I wouldn't go over $200 for that stock, okay? Because the value, if you liquidate everything that company owns, you're gonna get $59 a share. Yeah, no, I ain't paying $1,800 for a $59 stock company. And take a look at this. Dividend rate 21. Forward annual dividend yield 1.21. Let me repeat it really slow. 1.21. You get bank CDs that give you better pricing than that. You can even put it in government bonds and get a 5%. Why the hell would I put it in to AVGO and get 1.2%? What the hell were you thinking when you bought that crap? It's just my opinion. Okay? Look at this 5-year average dividend yield. 5-year average dividend yield, 2.88. I'm showing you a way to get a safe, predictable, consistent 1% per week, and you're talking about a 1.2 yield and a 5%, a 5-year average dividend yield of 2.88. Yeah, no thanks. Like, what the hell? Look, can you read it? What the hell were you thinking? Seriously. It's your money, do what you want. But for me, I'm retired. I'm not looking for capital appreciation. I'm looking for a safe, predictable, consistent 1% per week. Can't see your screen, it's all white. Come from Yard. Now, come from Yard. The screen behind me is live on YouTube. So if you're watching on your television or your computer, not your phone, not your iPad or whatever, not a mobile device, you're not going to be able to see these tiny numbers on a mobile device. That's why this screen is live on YouTube, so you can see the numbers better. Ooh, somebody likes Merck. And that's important to point out to everyone, has a different risk threshold. Gary, you're absolutely 100% right. Macy's has no dividends to pay in the near future. Why would you plan to play it? Macy's has been in business for over 100 years. Macy's was on the Dividend Kings list, which means they've increased their dividends for over 5 decades. Let's find out what's going on with Macy's at the moment. Okay, Macy's. Okay, Macy's got a book value of $15.14. Their yield is 3.88. That's a hell of a lot better than AVGO. 5-year average, 7.85. Historical data. I want to look at historical prices, dividends only. June. I don't know what you're talking about. June. Look at this. September 2023, December 2023, March 2024, June 2024. First quarter, second quarter of this year. So third quarter, more than likely, they're going to be paying another dividend. What's the YouTube channel? The 10-Minute Trader. Okay, now the 10-Minute Trader has a link. Should have a link on the web page, but the web page is being re-updated. So user 5724, I'm not quite sure. Lonnie, how you doing? I'm not quite sure what you're talking about when you said Macy's has no dividend. Apparently they do have a dividend, Do they have it for July? Wait a minute. It'll be the third month of the quarter, so we won't see it until September. June, July, August. No, August. No, yeah, July, August, September. Bucky, Bristol Myers Squibb, huh? BMY. BMY. Now, BMY, we're searching for a bottom, but we are looking at it because Bristol Myers Squibb is a dividend king. 5 decades of increased dividends. Okay, they had been in business for over 100 years also. Currently, they're going at $40.15. The 40's going for 35. That's not 1%. The 40/50 is going for 22, but it's not on the list because look at where we are right now. We're in a downturn looking for a bottom. Let's zoom in and take a look. You're gonna see a lot of fives. A lot of fives. 5 criteria: simple, safe, predictable, consistent, no way to lose. 5 rules: never buy something you don't want to own. Never sell at a loss. 20 years of increased dividends. Weekly options, and make sure the numbers work. Now we're looking for 5. 1, the high of the year. 2, the low. I'm sorry, the chart. The high of the chart, low of the chart. Where was it? Where is it? In which direction is it going? That's your 5. Okay, 5 for the chart. Okay, so it doesn't look that bad, but we really can't see what's going on. It gives us an idea of where the stock is and the direction it's going for the year. This is the year chart. Every time you change the chart, you're looking for something different. Okay, here's where it was a year ago. Here's where we are now. This is the direction it's going. Okay, great. That's for the year. That doesn't really tell me what I want to do in the next couple of days. Well, a year ago, we're at 64.22. Topped out at the end of July at 65.32. The last 90 days. The last 90 days, a total different story. Okay, high, low, where was it, where is it, which direction it's going. That's the 5 things I want to look at. Okay, she drops, finds a bottom, up, down, up, down, up, down. It's not quite found the bottom yet. Let's get a lot closer and see what that number actually is. Okay, so here's your 30 days. Now this looks awesome for next week if the numbers work, because right now the numbers aren't. If I'm buying it at $40.15, I want to sell the closest strike price, and that's going to be the $40. The $40 is going for 35 cents. Well, I'm losing 15 cents right at the top. She take 15 cents off there. It means I'm walking away with 20 cents on a $40 stock. That's only 0.5%. Now, you're going to find the big companies that have been around for over 100 years, the premiums aren't the greatest in the world, always. Okay, so 0.5%. What is 0.5% per week? Well, that's over 25% per year. Now, if you like Bristol Myers Squibb and you're okay with 25% per year, well, why not? All right, so what are we looking for? What we're looking for is the pattern that tells us where's it going to be in the next 5 days. Because Friday, which is tomorrow, Mark, you want to look at pins? I never heard of pins. P-I-N-S. All right, we'll throw it in there. We'll take a gander at it. So what am I looking for to give me an idea where she's going to be in the next 5 days? Well, here we go. Here's where we are 30 days ago. Okay? She drops here. She turns around, goes to the upside. Finds our top for the year, for the 30 days. Drops down, and that's our 30-day bottom. See that? 30-day top, 30-day bottom. Okay? Now, we, the investors, we decide if that's too low. And we did. We decided, hey, that's too low. So we started buying it, and now it's back up here again. Okay, wait a second. Now I want to take my profits. Because it ain't a profit until you take it. And nobody ever went broke taking profits. So here's a 30-day bottom. She suits up. Okay, a little too much. I want to take my profits. We do. Now we're down here looking for the new bottom. See, here's a 30-day bottom. We're looking for a new one. As soon as we find it, we're going to actually write Bristol Myers Squibb down for next week. BMY, because I like that drop right there. See that drop from the high to here? I figure another day or two to the downside, then she's going to turn around and go back up again. If you like Bristol Myers Squibb, that's the first question. Does it make sense? Second question, do I like Bristol Myers Squibb, BMY? And if so, it's going to give me a 0.5%. A 0.5% ain't the greatest in the world. I like 1% personally, but a 0.5% will give you 25% per year. All right, user 5724. You want to take a look at Pfizer. PFE. All right. Bristol Myers Squibb. GEV is next on our list. GEV. I never heard of them. GE Verona. I never heard of them. And it's a no. Imagine that. Why is it a no? It has a monthly. Look at the chart. Look, she dropped, found the bottom, now she's going back up. If I would do a monthly, but I don't do a monthly because they just don't pay. Dell. We'll put Dell down here. Dell. Gotta love Dell. All right, we're gonna take a look at Dell in a little bit. We got a couple more to finish up from yesterday. Now, why don't I like monthlies? Well, number one, 172. I'm looking at this one. It's got 2 weeks. 3 weeks to, well, yeah, 2 weeks to go. All right, 172. The 170 is going for $7. That's a lot. The 175 is going for $5. Shit, that's huge. Seriously, that's huge. I haven't seen a premium that big. All right, so let's say hypothetically, we buy it at 172, and we sell the 170s. We lose $2 right off the top, so we're getting in $5.10 right off the top. So let's do a little bit of math. Clear that, $5.10. Yep, so we gotta do a little bit more than that. Clear that. All right, so we're getting $7.10. All right, so it's at 72.88. So we're losing 288 if we sell the 170s. All right, so let's subtract 278 from that 710. Subtract 288, and we're walking away with 422. Okay, so let's divide it out. 172. Nope, 170, because remember we already subtracted that. Okay, so that's 2.5%. 2.5% for 3 weeks. Okay, not this Friday, not next Friday, but the Friday after, the 19th of July. That's 3 weeks away, 2.5 weeks, but still. So 2.5%, I got to divide that by 3. Divide that by 3, and that gives me 0.8% for the week. Okay, that's not that bad, 0.8% for the week, because if you multiply that by 52, that would give me 43% per year. Now, 43% is not bad, but here's the question. Who the heck is GEV? I've never heard of them. Better yet, let's see how often they increase their dividends. For that, we go over to Yahoo Finance, GEV. All right. And they have no dividends at all. So, this is horrible. Number one, they've got no dividends. No. Number two, they're monthly. I don't like monthlies. The reason why I don't like monthlies, they usually don't pay. Well, this one is paying. However, if I don't guess where it's going to be in 2 weeks, I can't say it's going to be up here in 2 weeks because she's going to go up. Hold on, let's take a look at this chart a little bit more. Tell me if it makes sense to you. Look at that growth. That's some nice growth. Okay? Up, down, 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 up, down. Okay, down. Now look at, she's going up. But look how quickly she moves. Okay? This is 1 week. Up and then down. Okay? This week, up and down. Okay? This week, a bottom and a top. This week, a bottom and a top. Yeah, we're going out 3 weeks. Well, we got a bottom here, we're gonna have a top. And then we're gonna have 2 more weeks. I have to guess where the heck it's going to be. Yeah, no thanks. Because I'm doing this weekly. I don't want to figure out where it's gonna be in 3 weeks. Okay, have you ever had cases where only some or none of the contracts were bought up on a trade? Now, I'm not 100% sure what you mean by that. Okay, because when you see these numbers here, bid and ask, this is what you can sell it for, this is what you can buy it for. Okay, bid, you can buy it right here. Okay, the bid is what you're going to receive when you sell it. Okay, the ask is if you're a buyer. Now, I'm not a buyer. I don't buy options because options expire. That's what I like about options because I buy the stock. So once you buy the stock, you own the stock at that price for as long as you own that stock. So if I decide to buy this one at 172.88, that's always, always, always going to be my number. All right. What changes is this mess right here. This mess is created by us. We are the buyers and the sellers. Okay? So, that being said, I just don't like monthlies. They just don't work. Okay, so I missed a couple questions. How do I find stocks that way dividends, and how do I know how much they'll pay? All right, Lone Wolf. Okay, write this down. You ready? You got a piece of paper? Okay, hold on. I'm getting warmed up here. Here we go. Google. Any search engine. Google, Bing, whatever you want to use as a search engine. Dividend stocks list. Dividend Kings list 2024. Dividend Champions list 2024. Dividend Aristocrats 2024. Dividend Contenders 2024. Warren Buffett's list 2024. Those 5 lists right there will give you over 300 companies that have increased their dividends consistently. Now, we checked earlier this week, there's over 9,567 different companies you can choose from on any daily basis. I only look at 300. Okay, it's only 300 that meet my criteria. Okay, 20 years of increased dividends, weekly options. Those 2 criteria alone take away 97% of all the stocks in the stock market. That's it. I have no desire whatsoever to look at something like this. Okay? When somebody shows something like this, I say, what the hell were you thinking? I mean, think about it. There's no dividends. So stocks go up, they go down. They go up, they go down. They go up, they go down. What are you gaining when the stocks go down? Absolutely nothing. And if the stock doesn't even pay dividends, what are you gaining from a company like this? Well, you're gaining stock appreciation. You put your money in there, and then you wait years for it to go up to a point where you want to sell it. Well, I ain't got years. All right? Now, you all going to retire at some point in life, and you got to decide, how do you want to retire? Do you want to age out? Do you know what that means? You get to a certain point, and the boss says, oh, hey, dude, you're just too old. Go home. Age out. 2, you can walk out. That's what I chose to do. It means you have enough money in your investments that gives you enough of a return to take care of your monthly obligations. That's how you walk out with a certain amount of money. Or you can get your ass carried out. That's number 3. It means you die on the job and they just carry you out on a gurney. It's going to happen. You can agree with me. You can disagree with me all you want. Okay? Really, honestly, it's not going to hurt my feelings one way or another. Okay? We're all going to retire, and eventually the money has got to come from somewhere. Okay? Nobody's going to stop off and just give you your groceries for free. The electric company's going to say, hey, well, he worked 30, 40 years, and then, well, let's give him his electricity for free. That ain't going to happen. Mortgage company ain't going to do that either. Well, yeah, he did work for 30, 40 years. Well, he doesn't have to pay the mortgage anymore. It doesn't work that way. Once you retire, you have to have some money coming in from somewhere. So where is it going to come from? You can give it to a money manager, and they'll give you whatever they give you. What's the draw nowadays? 4%? Well, at 4% or even 5%, you're going to need a fat chunk of money to get something. Now, I do it for a weekly cash flow, and I make about 50% per year. 50% per year is a nice fat chunk. Now, does my account grow? Nope. I spend all that money just living. All right. I messed up some of these questions, so let's keep going. How do you know which stocks pay dividends and how much they'll pay? I am new to trading, obviously. Lone Wolf. You're not the only Lone Wolf here. There's someone else named Lone Wolf here, who's been here for a while. Now, how do you find out? First of all, you want to download your lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There's 300 really good companies. Really good. They've all increased their dividends consecutively every year, year after year after year. Worst case scenario, if the stock price goes down, you're still getting higher and higher dividends. Okay, now I like weekly options. Why? Well, if I buy a stock for $100 and I sell it for $100, well, I don't really make anything off the stock. I really don't care. I want the premium. What's the premium? Well, if you're new here, the premium is what you collect when you're doing a covered call. A covered call is one of the safest trading strategies there is. You buy the stock and you're selling somebody the right to buy it from you. So if I buy it at 172.88, I'm going to sell it at 170. I'm going to collect, in this particular example, I'm going to collect $7.10 per share. That is well over 1%. That's great. I love that number. However, it's a monthly, okay, and I don't do monthlies because this particular stock, number one, it doesn't have dividends at all. Number two, it's a monthly, and now I have to figure out where the heck it's going to be in the next month. Now, and I get a check once a month. Yeah, no thanks. Okay, I want my checks once per week. Now, with once per week, I still have over 300 companies to choose from. Well, how do I figure that out? Well, I throw them into, now I like Thinkorswim because Thinkorswim is a trading platform owned by Charles Schwab. Not that I'm a fan of Charles Schwab, but just they seem to own it. Okay, it used to be standalone by itself. They got bought out by TD Ameritrade years ago. TD Ameritrade got bought out by Charles Schwab, so Chucky Boy owns it now. Okay, now once you take your stock list and put it into the calendar, okay, these little green dots represent the EX date. What does that mean for you new people? Well, there's 4 dates you need to know when it comes to dividend stocks. Number 1 is the dividend announcement date. That's kind of self-explanatory. It's just the company say, hey, this is how much money we made, this is how much you're going to get, and this is when we're going to pay you. Okay, the announcement date. Number 2, the EX date. This is the important date. Okay, let me repeat it again. The EX dividend date is the important date. Why? Because that's the last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you have to buy the stock before the date, which is these little green dots. These are the EX dividend dates. Okay, so if I want to collect the dividend for Bank Mellon, BK, it has the dividend on the EX date on the 27th. I got to buy it the 26th, 25th, 24th, the 11th, the 5th, the 27th, the 30th, any day before the EX date, okay, in order to qualify for the dividend. Date number 3, the date of record. Whoever owns the stock on the date of record. Hey, Catherine, how you doing? Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, very simply, the payment date when you get your money, okay? Okay, what do you think about these new weekly ODT funds? All right, Manito Badilla, you got to give me a stock symbol because I don't know if ODT is a stock symbol. ODTE, is that right? ODTE. Yeah, that's not a stock symbol. Uh-oh. I missed some questions. I missed some questions. Ooh, wow. Wow. All right, Del, we already did. All right. Jane from Earth. How are you doing, Miss Jane from Earth? Let me read your question. First of all, welcome to the show. You're new here, I can tell, because I'm really good with names. I see a name, I can remember it. Sir, if you had 600K, where would you invest it in? Well, Miss Jane, just to let you know, 98% of all my money is invested at all times. I have a credit card and a debit card attached to my trading accounts. Okay, I am a big boy. I know when my bills are due. I do weekly options. Okay, so I make all my money on Monday. On Friday, I balance out my accounts. Okay, and then I'll be able to pay my bills. It's really not that difficult. It's a timing thing. Monday comes every Monday. Friday comes every Friday. So I buy all my stocks on, let me go back to the calendar. Okay, I buy all my stocks on a Monday. By Friday, I will know how much I made. Because I make all my money on Monday. okay? Because the premiums come to me directly immediately. Now, Friday, I will know what I'm carrying into next week, how much I made, blah, blah, blah. You can't answer the questions of tomorrow. Wait a second. We can't answer the questions of Friday with the knowledge we possess on Monday. Okay, so we buy on Monday and Tuesday, Wednesday, Thursday. We just take a look at our accounts and make sure everything's balancing out okay. Friday, we decide whether or not we carry it into next week or whether we let it go, one or the other. But 600 grand would give you about $6,000 a week. If you cannot live comfortably off of $6,000 a week, you got a spending problem, my dear. That's just my opinion. What do I know? But what would I invest it in? Good quality dividend stock companies, because they consistently increase their dividends year after year after year. Hakuna, how are you today? He's over on what do you call it? Instagram. So, Miss Jane, think long and hard. What I would like you to get from this, Jane, is number one, does it make sense? That's it. A good quality dividend stock company, one that you heard of, one that you know of. Okay? I like household brand names. Let me give you a couple of indicators. Mandalese, U.S. Bank, Verizon, Bristol Myers Squibb, American Express, MasterCard, Globe Life, AbbVie, Procter & Gamble, Bank Mellon, Wells Fargo, Ally Bank, Aon, ATVI, Wells Fargo, I already said Wells Fargo, Capital One Finance, DHI. Now this is just 1 month, and that's only from one list. Now I got like 7 or 8 lists, so I got a lot of good companies that a lot of them are over 100 years old. But Jane, if you're really interested, okay, DM me your phone number. I'll give you a buzz. We'll chat. It might not even be for you. This is so boring and so slow. You might not like 1% per week. But like I said, 1% on a $600,000 account is $6,000 a week. If you can't live off of $6,000 a week, honey, you got a spending problem. But that's just my opinion. What do I know? CP, is your goal to get assigned with every covered call you write? CP, that would be awesome. Now, granted, it only happened once this year. It happens once in a while where everything you buy on Monday is gone on Friday. Yeah, that happens once in a great while. Not all the time. Austin, thank you for that. Happy 4th of July. It is a lovely day today. All right, Buck Randy, D-Nut. Don't, all right, D-Nut, don't, for they will be in most McDonald's by the end of 25. Okay, Buck, I have no idea what we're talking about, but okay. Inspire me. Have you ever had cases where only some or none of your contracts were bought up on a trade? I don't know 100% what you're talking about, but let me just give you an idea what I think you're talking about. Okay? Now, when I buy a stock and I sell an option, I'm assuming you're talking about will they or will they not sell. Well, if they are listed for sale, okay, if the market maker lists it for sale, he is required by law to fill it at the market price. Okay? You shoot it out to him, it goes onto his computer, and then he hits fill. Now, if you do a limit order or a stop limit order or a trailing stop or any one of those weird orders, yeah, he can decide whether or not he wants to. Okay, so there's no guarantee there. Market order, he is required to do it. Okay, inspire me. Okay, yep, that one works. Let's go some of these other questions before I miss them out. Lone Wolf, how do you find stocks that way dividends, and how do I know how much they'll pay? All right, Lone Wolf. I already gave you the list of stocks. That's number one. Okay? How much will they pay? Well, once you put them into your calendar to find out when they pay, you just click on one. AbbVie. Let me click on AbbVie. See that right there, that blue box? Down here, the dividend's $1.48. That's how much it pays. All right? How much do you get? Well, then you go over to trade and you put in AbbVie. ABBV. And AbbVie is $164 stock. So the 165 is going for 141. Now 141 is not 1%, but let's find out exactly what it is. So 41, and we want to divide that by 164, divided by 164, 30, was that 35? Yeah, 35. Comes to a grand total of 0.85. Now, 0.85 is really not that bad if you think about it, because you multiply 0.85 times 52, because there's 52 weeks in a year. That's a possibility of 44.5% for the year. That's not bad. I still prefer 1% per week, but you know, it is what it is. Okay, Jordan. All right, Lone Wolf. How do I know which stocks pay dividends and how much they'll pay? Well, we just covered that one, Lone Wolf. Manitobadilla. Okay. What do you think about these new weekly ODT funds? You got to give me a ticker symbol. ODT funds, I tried that. Doesn't make any sense to me. Mr. Kardashian, back again. You can only sell it if there are buyers for the contract. Can I explain covered calls in more detail? Well, I'll see if I can. Okay, what we're looking at right now is AbbVie. Okay, I don't know if you know who AbbVie is. It's just a company that they're over 100 years old. They've been a dividend king for 5 decades, which means they increase their dividends consistently. That's what I like. I do not want to give my money to a company that is new or someone that's not profitable on a consistent basis. That's my criteria. I want a company that's continuously profitable. Well, if they're continuously profitable, well, they share their profits with their investors. And that's what I am. I'm an investor. You're an investor. Okay, so, James, see if I can explain this. Stock prices go up and down depending on the mood of the buyers and sellers. Basically, you know, they go up, they go down, they go up, they go down. Wherever you jump in, think of it as a merry-go-round that goes round and round and round and round and round. And you jump on at any point. The point you jump on in is the purchase price. Whatever you buy it at, that is your jump on point, or whatever you want to call it. Okay? If you buy AbbVie first thing tomorrow morning, 164.35, it will forever stay with you until you sell it, 164.35. Now, it's going to continuously go up and down in value, but your entry price will never change. So, if your entry price is 164.35, remember rule number 1, never buy something you don't want to hold. I got no problems with AbbVie. It's on my personal list. I will buy AbbVie if the numbers work, all right, and the chart works. But we'll worry about that in a minute. But the covered call is, once you buy the stocks, you have to buy in 100 share increments. Okay, 100 shares equals 1 option contract. 500 shares, 5 option contracts. Okay, so if I buy 100 shares, I own it at 164.35. I can then turn around and sell it. Sell somebody the right, not the obligation. There's a huge difference between call options and put options. Okay, I don't teach put options here because they obligate people. I don't like obligations. I'm one of those rebels. You tell me to go left, I'm going to go right. You tell me to go straight, I'm going to go backwards. You know, I just don't like people telling me what I have to do. It really peeves me. All right, so first thing you got to do is decide which company you like. We'll take a look at this one just as just an example. 164.35. I can then turn around using a covered call method. Sell somebody the rights, not the obligation. Think of it this way. Let's say hypothetically, your name's James, right? All right, James, hypothetically, you call your buddy right across the street. Say, hey, Joe, I'm going to the store. I'm going to the packy, pick up a 6-pack. You want anything? He says, yeah, pick me up some Modelo. Great, not a problem. Modelo's at 164.85 or 164.35. Great. He'd come back, he pays you the 164.85, and he throws you a little bit for your effort. Here's your little bit for your effort, called the premium. And you're buying the stock, you're selling it to him for the exact same price you paid for it, and you're collecting what is called a premium. Kind of like a favor. Okay, hey, I'm running the store, let me pick you up something. Sure. Here's the money for the stock. Here's the little bit extra, kind of a favor. That's called a premium. It's the right, not the obligation, to buy a stock at a certain date for a certain price. Okay, the price, $165. From the time you sell the option, or whenever they buy it, from the time they buy it to the time it expires, that's the time frame. It is a legal binding contract. Okay, so if I buy it at $164.35, I sell somebody the rights to buy it from me for $165. Well, I'm making an extra, what is that, 65 cents on top of the 165. If I sell it for 165, I'm getting an extra 65 cents along with the 275. You're collecting a premium. Safe, predictable, consistent. I'm just looking for the premium. I honestly could care less if the stock goes up. I'd like the stock to go up or to stay the same. In this instance right here, I wouldn't do it because here's your 30-day bottom here. Okay, wait, all right, you guys can't see me. Here's my 30-day bottom, way over here, 156 area. Okay, she shoots all the way up. Here's the high of the 30 days. And then she drops. Well, she hasn't found the bottom yet. She's going to keep going down until she finds the bottom. Once she finds the bottom, then it's like, let me think. Do I want to jump in? That's when I like to jump in, because she goes down to a certain point, right? And then we, the buyers and sellers, are going to say, wait a second, AbbVie for 158? Hell yeah, I'm going to buy some. Right now, it's not at 150. It's not at 158. It's at 163. So as she falls down lower and lower and lower, she'll find the bottom. She'll turn around and then start going back up again. So this one, I like to look at sometime next week or the week after. So I'm going to write it down for next week, AbbVie. I think I already did, didn't I? Yeah, I did. I already wrote it down for next week. So it's a contender for next week, but not this week. There's only one day left this week anyway. Wow. Are you getting 1% per week, Stutes? Yes, I am. Is it Stutz or Stutes? James. Slopper. You buy the stock, then sell an option, which makes you money. The stock rockets. Yeah. Oh. Accept my request to join on TikTok. Hakuna, I gotta find it. I got 25 messages, and I don't see where yours is. What is that? Nope, that ain't it. Guest right there. Is that it? There it is. There we go. And there you go. Did I do that right? I did it right. Woohoo!
You did it right. Howdy.
Howdy. How are you doing?
My camera.
Okay.
Yeah, so it's always in the right corner or in the left corner. Happy 4th of July.
Okay, first of all, what stock are we looking at? So I can pull it up so everyone can see it.
I don't know what it was. I think it was Walgreens. But we can just take the numbers as an example. Okay? Can you see what I...
Yep, I can see what you're saying. I see what you're doing.
So here we have the share price.
Yep.
$100.25.
Yeah, that was last night we looked at that one because I remember I kept saying 125. No, $100.25. Okay.
Price is at 100.
Correct.
That makes us a 25% loss.
25 cents, correct.
Yeah, 25% loss. And the premium is 2.72.
Correct.
So then we have to deduct the loss from there.
Correct.
That gives us our net premium at 2.47.
Correct. Correct.
And then we take then we're going to count our return on investment. So we take 2.47 divided by the strike price.
Correct. Correct.
And that will give us 2.47%.
That is correct.
So I was trying to formulate this in words. So can you say this in general, that you take the difference between the share price and the strike price, and if there is a loss there, then you deduct that loss from the premium.
Okay, here's an easier way of doing it. You ready?
Okay?
Okay. Move your piece of paper up a little bit so you can write this down.
Sure.
Okay. You take the strike price 100.
Yes.
Okay.
100.
Okay. Add the premium, which is 272.
Plus premium.
Okay. What do you come up with?
What we said is the strike price. Yeah, the strike price was 100 plus premium. That was
272.
272. So that will come to 100 and 272.
Correct. Now, subtract the purchase price.
The purchase price that was
100.
I subtract that from there. That is minus 100, and that give us.
No. It's 125 cents. Not the strike price. The purchase price is $100.25.
Yeah. So sorry. Okay. Okay. I have to write. Deduct share price. Okay. 100.25. Okay.
Yep.
And
That should give you $2.47.
yeah, I deduct that from that.
Yep. And your answer should be 247.
And that will give us 2.47.
And you divide that by the strike price.
Yes, and that will give us 2.47%.
Correct. It's a lot easier than deducting it from the purchase price. It's the
Thank you
same.
so much, James. You are a pillar in the community. You are a star. Thank you so much. I have learned a lot from you.
Well, that's an idea.
I do appreciate your sharing your knowledge.
I'd like to get a look at that pamphlet once you're done with
The
it.
reason why it takes a little bit longer, and I know you can say that we can look at YouTube, but the thing is that when you point on YouTube, then we don't see your fingers.
Yeah.
Pointing, we just see the screen.
Yeah. Well, actually, I got it.
Maybe if there could be a solution that you could point with your mouse on YouTube, so it would be easier to follow.
Yeah.
Just a thought.
Yeah, a friend of mine has pointed out there's a little app I can upload to my computer that will allow my cursor to glow. It makes it easier for people to follow the cursor. But as soon as I upload that, then we'll get that figured out.
Yeah.
Alrighty?
Okay, James, that was all. Thank you for letting me up.
All right, now let me see if I can, how do I go back to this again?
I can kick myself out.
All righty.
I think you either click on you see there where you have the guest icon. It's like two guys there. You can click there, and then you can just boot me out.
See you later. All righty then. Hopefully everybody understood what we were doing there. Okay, stats. Yeah, we're getting over 1%. Buy the stock, sell the option, make your money. Yep. Okay. CP. You aren't on the hook for the amount over the strike price. Your stock will just be taken away. Yep, you're right about that. Simone, how are you today? What's up, Mr. Kardashian? Top 3 dividend stocks: Macy's, Nordstrom's, and Kohl's. What's your advice to get financial freedom? Oh, H. Vega. I'm gonna repeat what a couple of people told me online. Okay, Gary V was one of them. Gary V was one. Grant Cardone was another, and Andrew Tate was another. Stop buying stupid shit. Stop buying stuff you don't need. It's actually that simple. Ooh, I missed all these questions. Let me go back. La 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 la. Sorry, I have to go backwards. I'm missing some of these. What's my opinion on spiders? Spiders is no. Tesla, Daniel. Tesla, sorry. It's options trading, or option trading just gambling? Isn't option trading? No, Ozzy. I'm going to agree with you there for a second. Option trading is gambling if you don't know what you're doing. Seriously, if you don't know what you're doing, you can lose a bunch of money. Don't do it until you understand what you're doing. Tesla to the moon, I'm going to disagree with you. What's your opinion of Spider? I don't do the Spiders. They're out overpriced and they don't pay dividends. Opinion on BlackRock and Citadel-backed stock exchange in Texas. Don't really pay attention to it. It has nothing to do with me. How do you know it's a 30-day? Well, simple. 5 July, 12 July, 19 July, 26 July. Those are all weeklies. Okay? July, 16 August, 20 September, 20 December, January 2025, June 2025. Yeah, that's a monthly. That's how I can tell. It says it right there. How many days the expiration? 15, 43, 78, 169, 561. Those are monthlies. Big difference between monthly and weekly. I only do weekly. I'm looking for a safe, predictable, consistent 1% per week. And the only way I can get that is using weekly options. Now, I found that there's 300 companies that have consistently increased their dividends consecutively every single year and have weekly options. Those are the only ones I'm interested in. There's 9,567 companies that I can invest in at any moment in the stock market. That's a lot to choose from. I'm only looking at a small sliver of what's there. Okay, where is Kohl's headed for tomorrow? Pokey hits. Well, let's find out. All right, Kohl's. Okay, up, down, nice, nice, nice. Last 30 days right here. Okay, check it out. Kohl's. I really couldn't tell you where it's going to go tomorrow, but I'd like to tell you where I'd like it to go. Take a look at what we're looking at. 30 days ago, here we are. She comes down, she goes up. Finds our 30-day bottom right here on the 17th. Okay, 5 days later, we're at the high of the 30-day period. Here's your 30-day high. A week later, 30-day top, 30-day bottom, 30-day top. And then she just drops 1, 2, 3, 4, 5, 6 days to the downside, 1 day to the upside. Now, I like 2 days to the upside before I jump in. Okay, so if I'm looking at Kohl's, I'm looking at jumping in. I want to open up higher tomorrow. Okay, if it opens up higher tomorrow, that's a buy signal for me. I'm not telling you to buy it. Okay, I'm just saying for me, I like 2 days to the upside after a 30-day high. 30-day high, she drops down, new bottom. It's not a 30-day bottom, but it is a new bottom. And then Friday was an up day. Wednesday was an up day. You would have done very well in the last year and a half. Okay, David, I did do very well in the last year and a half. I don't know what you're talking about, but that's okay. How can you learn this 1% per week? Do you have a course? Oh, of course I do. But man, you could just come here every day and learn what's here. Now, you might want to think of this for a second, okay? I do have a morning trading group, okay? A bunch of us serious investors, we get together Monday, Tuesday, Wednesday, Thursday, Friday, okay? Monday, Tuesday, Wednesday, Thursday, 9 a.m. Okay, we're on at 9 a.m. Market opens at 9:30. We take a look at a bunch of stocks that we've been looking at. Now we do most of our buying on Mondays. Tuesday, Wednesday, Thursday, we balance it out, see what's going on. We don't do very much buying on Tuesday, Wednesday, and Thursday. Friday, we jump on at 3 o'clock. Why at 3? Well, because the market closes at 4. If there's any position anybody in the trading group needs to take a look at so they don't lose any money on Friday afternoon, that's what we want to take a look at. I have to leave, James, for sleep. Dentist appointment early morning. Have a great 4th evening, and thanks for sharing. Hakuna, you have a great day. I am going to want to take a look at that pamphlet when you're done with it, okay? I'd like to get a copy. All right, James, I'm ready. I request you accept. Okay, I got that one. Puts and calls are super risky. Dave, I'm going to agree with you. and then I'm going to disagree with you. Okay? Now, let's say hypothetically speaking, I wanted to go to the doctor's office tomorrow and actually what do you call it? Oh, give me a second. Perform, that's the word. I'm going to go to the doctor's office tomorrow. I'm going to perform some open heart surgery on the first volunteer that comes in. That's risky. I know absolutely nothing about open heart surgery, really. But I've been doing puts and calls for over 20 years. I'm pretty good at what I'm doing. Okay, if you don't know anything about it, don't do it. It can be risky if you don't know what you're doing. If you know what you're doing, it's pretty easy. Ooh, I got 31 questions I'm missing. Remember, folks, you are trading against massive corporations. Yes and no. What stocks? A whole bunch of them. With tools you could only imagine. Yep, whatever. James, accept my request. Already did. David, buying is very risky. Selling is much less risk. Covered calls and cash secured puts. I'm going to agree with CP. Gabriel, do you think that the gap on MU will fill up tomorrow? Oh, MU. Hold that thought. MU. That gap right there, I honestly couldn't tell you. Okay? But take a look at the last 30 days. Okay? MU looks like a good buy. Okay, the last 30 days. Here we are. 30 days ago, we're at the 30-day bottom. Okay, 2 weeks ago, we're at the 30-day top. She drops, pulls back up, gaps down, finds a new bottom right there. 2 days to the upside, perfect opportunity to jump in. Trader Troy, 102.72. I have no idea what you're talking about. Walgreens is giving 2.4%. Yeah, Walgreens is a little bit fickle. We're looking to find the bottom on Walgreens. Okay, Walgreens is paying a nice premium. Take a look. See this big drop right here. I bought a bunch when it came down to here. It kept on dropping, dropping, dropping. We have our new bottom here. It hasn't seen this bottom, I think, in 10 years. Okay. You want to find out how to make money in the stock market, you buy low, you sell high. You can't get any lower than a 7-year low. Okay, I'm not saying jump in and buying it. I'm saying we're watching it closely. When it finds the bottom, turns around, starts going back up. Yeah, okay, I read a news article. Walgreens is shutting down some stores. They get 8,500 stores. They're closing 150 stores in the United States. And they're closing 300 stores in Great Britain. What does that tell you? It tells me that things are worse over there than they are here. Now we're closing 150 stores because current administration is soft on crime. You know, they're soft on crime and they don't want to prosecute. Anyway, don't get me started. Okay, so don't know, but we'll keep an eye on Walgreens. CP 100. I don't know that. 247 per contract. Okay. Prezi perhaps. I have no idea. Ultimately, you divide profit by cost to get the percentage. Trader Troy, you're absolutely correct. Where were you 5 minutes ago? Learned a lesson this week. My Friday Cisco calls were assigned yesterday before I could buy back tomorrow. Well, Secretariat, did you make money? Okay? That's the whole idea. See, now you've been Secretariat, you've been here long enough. If you bought Cisco, I'm going to hope you bought it and sold calls so you at least make a profit if they get assigned. If they get assigned, great, you're back into cash. You can jump back on that pony and go for another ride next week. Or you can buy tomorrow and take it for a ride next week and get an extra day. But hopefully you made money on that one, Secretariat. Evening, DK. They took my dividend. That you have to keep your eye on. Okay? Now, you should know better. Okay? If you buy first thing tomorrow morning, you still might be able to qualify for a dividend. And what did you say it was? What company? Cisco. Alrighty. Hold on. CSCO. Now, we looked at Cisco a couple of days ago. All right. Now, $47.50. I'm assuming you got it at $47.50 and you sold the 47.50s. Why the hell would somebody buy it at 47? Unless you got it last week and you bought it at 46. But anyway. Name your top 3 dividend stocks. I already did that. Macy's, Nordstrom's, and Kohl's. CSCO. Fifth. 39 cents. So, wait a second. Oh, I'm looking at the wrong date. That's probably why. Okay, here we go. 40 cents. Okay, so let's look at CSCO for tomorrow. Okay, so Secretariat, check this out. 47.20. If you jumped in, bought the 47s, yeah, you'd be losing money on that one. The 47.50s, you're losing money on that one. Yeah, that's not no fun either. The 47s for next week, yeah, that's not even 1% either. The 47.50, yeah. I say, take your profit and say thank you very much. The numbers just aren't working for Cisco. Sorry, dude. Sir, do you use Quick DX Analyst? No, I don't. No idea what that is. NTR, please. Never heard of NTR. NTR. Nutrien. Okay, 52, the 52s. Let's get rid of this one. 52s, yeah, the numbers don't work. Let's go here. NTR. 53, 54. Maximum. Yeah, I'm going to say no to NTR because they've only been paying dividends since 2018. Okay, what is that, 6 years? There are too many other companies. Okay, that's just one reason I'm saying no. Okay, here's another reason why I'm saying no. Okay, take a look. Not even looking at the chart. 52.19. The 52s are going for 35 cents. You're not getting 1%. They haven't increased only for 6 years. Sorry, Hassa Pfeffer. NTR's a no for me. Okay, if you like it, great. Let's take a look at the last 30 days. Okay, 30-day high, she drops, pulls back up, drops again. Tuesday was the bottom, Wednesday's an up day. If tomorrow's an up day, then that's a buying opportunity, if tomorrow's an up day. But I don't like NTR because the dividends aren't consistent long enough, okay? And the premiums aren't 1%. Okay, why would I jump into a stock, number one, I've never heard of? Okay, and the reason why I've never heard of it, they don't have 20 years of increased dividend. That's why I've never heard of it. Okay, I don't look at stocks that don't fit my criteria. It's just humbly a waste of my time. Amazon, I'm gonna crush Walgreens business over long term. Maybe they will, I don't know. Sir, do you use Quick? No, I don't. Can dividend cash flow monthly? Yes, it can. Where was that? Who was that? Senior Awesome. Hey, Senior Awesome. Dividend cash can flow monthly. I prefer weekly, but hey, if you're into monthly, why not? Moderator Wade muted. Thanks, Wade. Yes, my Cisco sold calls at 46. So I'm assuming you made money off of it. Okay, I'm sorry you missed out on the dividend, dude. But remember, once the dividend gets paid, the stock is going to drop. So you might be okay with the fact that, all right, she's going to drop a little bit, so I'm out. I made my money. Great. Can SPX print money for calls 3 days in a row? SPX? I don't do SPX. SPX. Yeah, dude, that's a no. Seriously? $5,000 a share? What? You're definitely in the wrong group, dude. Seriously. Okay? If you think some of us have enough money to buy 1,000 shares at $5,000 a share, yeah, definitely in the wrong group. Sorry, dude. A-Tour. Price is crazy. I never heard of ATOR, A-T-O-R. Now, usually, if I've never heard of it, it's going to be a no. And it is a no because it has no options. That's a no. Yeah, thanks, CP. Where can I learn investing? Unlike Resda. Well, you could come here and hang out with us. I mean, we look for a safe, predictable, consistent 1% per week if you're okay with 1% per week. Because some people it's not okay. Some people it's not enough. Now, I'm old and retired, okay? So I look for a safe, predictable, consistent 1% per week. And I use a dividend capturing strategy. And I use, what do you call it? Covered calls. Covered calls is one of the safest trading strategies there is. Hassan Pfeffer, okay, got it, thanks. NTR. United Technologies, isn't that UT? Marvin, is that UT, United Technologies? No, that's United Therapeutics. That's a no for United Therapeutics. Yeah, all right, Marvin, you got to give me the ticker symbol. Okay, when you give me a company's name, I don't know the number of. Look at ATOR price. Tell me if it's right. All right, sampler, we already did look at ATOR, and ATOR was a no. ATOR. Yeah, it's a no. It's not even popping up. It's that much of a no. Thinkorswim doesn't even want to insult me by giving it to me. Guys, hold a second. I gotta go get my drink. Gotta loosen up the old vocal cords, you know? All right. Next on the list. Hill. Really? Hilton? H-I-L. H-I-L is not Hilton. Sorry, dude. H-I-L is not Hilton. All right. Sorry. I missent the last one. Try to hit return, and it isn't available. Which is better, MU or GPS? Well, MU, Micron Technologies. Really? Micron Technologies? MU. All right, I'm going to say no to MU. It's got, what, 3 years of dividends? Okay. Now, Gap, GPS. Oh, that doesn't have very much dividends either. From the 18th to the 24th, that's only 6 years of dividends. All right, so we got one lemon as opposed to the next lemon. All right, so MU. All right. All right, so here's MU 30 days ago. Way down here, 125. Shoots up to 157. Drops back down to 127.50. And here's your 2-day bounce right there. Looks lovely, right? Okay. 136.30. The 136 is going for 355. That is sweet. Let's take a look at tomorrow. What is tomorrow's 136 is going for? Hell, I'd do the 136s for tomorrow. Check it out. The 136s for tomorrow, right, is going for 167. You're losing 30 cents right at the top. You're still walking away with 137. Tomorrow, that's 1% for one day. If you like Micron, okay? So look at it. There's your 30-day bottom over here, 30 days ago. Your 30-day top was 2 weeks ago. Okay, she dropped. Monday is not a 30-day bottom, but it is a bottom. And 2 days the upside, Tuesday, Wednesday. So if she opens up tomorrow morning on the green side, okay, if she pulls back, it's going to be a no. But if she goes to the upside, then it's going to be yes. So at 9:30 tomorrow morning, if you like Micron, okay, that's when she opens up. That's Micron, okay? And for one day. So if you jump in first thing in the morning at 136.30, you can sell it for 167. That's 1% for one day. How can you go wrong with that? And then next week, you get 1% this week, and then you do it again next week at 355 on Monday, or whatever it's going to be on Monday, because it changes every day. All right, so that's MU. And what you wanted to compare it to, GPS, the gap. Interesting. 24. The 24's not quite. Well, look at the numbers on the 24. Okay, I can buy it tomorrow morning, 24.12. The 24s are going for 16 by 47. There's a possibility you could get 1% out of that, even after you took off the 12 cents. But next week, yeah, definitely 2% next week. Okay, fine. But let's take a look at the chart. Here's your high, here's your low, here's where it was, this is where it is, and this is the direction it's going. Great. Look at the last 30 days. Take a look at the last 30 days. 30 days ago was the 30-day high. She drops, and Tuesday is a 30-day bottom. Yesterday, Wednesday, okay? Wednesday is an up day. Great, one more update. That's an invitation to jump on in. And you can get close to 1% for tomorrow. Okay? And if she doesn't hit your target tomorrow afternoon, well, you can do it again next week and get another 1% next week. Oh, hell yeah, why not? If you like Gap or Micron. All right. Let's keep on trucking. Let's keep on keeping on. Got to make the best of a bad situation ever since that day. All right. For anyone that isn't okay with 1 cent a week is destined for the poorhouse due to greed. All right, CP, you never know. Some people just don't think 1%'s enough. Happy 4th. Hey, 86, how you? Jimmy, how you doing? GL, huh? Globe Life. GL. That Warren Buffett's 82.44. The 82.50s. The 82.50. Is that right? Well, I'll give you 0.5% tomorrow. Next week, a little less than 2%. Okay. So let's get rid of this one. Take a look at the numbers, all right? Globe Life, it is on Warren Buffett's list in case you guys need some kind of confirmation for this company. So, if it's on Warren Buffett's list, to me, it's never a question because my assumption, the old boy has done all his homework before he buys anything. So if it's good enough for old Warren, it's good enough for me. Let's see what it's going to give me. At 82.59 to 82.50 is going for $1.50. That's over 1%, close, a little less than 1.5%. All right, now. Here's the high, here's the low, this is where it was, this is where it is. Okay? What's the last 30 days? The last 30 days. It's going to be a no. Sorry. Sorry, Jimmy. 30 days ago, around 84, 85, she drops. Here's your bottom right here. All right, here's your bottom. Right there's the bottom. And then she shoots up to the top, pulls back, shoots back up again. Way too close to the top. Right there. Way too close to the top for me. If you, Jimmy, if you like it and you want to jump in, more power to you. But how much higher is she going to go before she turns around and starts dropping? Okay, and if you're buying at the high, what are you waiting for it to go higher? Yeah, no, I'm not into the That's weird. All right. SIP. You want to take a look at Geo. Geo. They used to have a car, the Geo, years ago. $14.99. The 15s. Interesting. Interesting. Now, I've never heard of Geo, and Geo is going to be a no, just in case you're wondering. Let's put Geo into this. Find out what the dividends are. GEO. $2012, 10. It's only 10 years, 11, 12. It's like 12 years of dividends. and then they're kind of all over the place. 13, 13, 379, 33, 37, 38, 0, 38, 0, 0, 0, 38, 41, 43, 47, 48, 34, 25. They're going backward. Oh, wait a second. No. Geo is going to be big fat no. Last dividend they paid was January 2021. Okay, who came out with Geo? Nope. I miss some. Okay, SIP. Sorry, Geo's gonna no. All right, Resnick. Look over VHAI. Never heard of him. VAHI. Is that right? VHAI. VHAI. All right, I'm gonna thank you, Rizik, for wasting my time. Delightful. Thank you for that one. GNL. GNL. That's a no. Sorry. Ashton Gage, respectfully. Yes, using a vertical spread, you can make a daily money SPX regard. Yeah. How often do you make 1% per week? Well, Stutz, to be 100% honest with you. 100% honest with you. Four times this year I missed 1%. Okay, we're in week number 27. Tomorrow is the last day of week number 27. So, 23 weeks I've made more than 1%. 4 weeks I made less than 1%. 0.75, 0.85, 0.9, 0.95. Or is it 0.75, 0.8, 0.85, 0.95? Anyway, 4 weeks I've missed 1%. However, 23 weeks I've made over 1%. Now I made over 1% to a point where I think I'm at 32, 33% for the year, which is still averages over 1% per week, even though I missed 4 weeks. Justin Mead, Mara. I like Mara. Marathon 2098, and it's going to be a no. And I'm going to explain to you why it's no. It's only a no for this week. Now, I like Marathon. I do buy Marathon when time is right. At this moment in time, 2089 is what I could buy it for, 2089. Okay? The 21 is going for $1. That is a little bit less than 5% for the week. But here's where it comes to a no. Okay? Look at your last 30 days. Okay? 30 days ago, we're way over here, 1999. The 30-day bottom is here on the 11th. Okay, it's 1750. She goes up, pulls back, up, pulls back, up. Look at that nice upward movement. Tuesday. This past Tuesday is your 30-day high. What happens at a 30-day high usually? Profit taking, profit taking, profit taking, profit taking. They're taking their profits. This baby is going to drop before she turns around and goes back up again. So I'm going to put Mara on my list, not for this week, not for next week, but for the week after. Look at that. NOK's there. M-A-R-A. Because I like Marathon. Marathon pays a nice, decent premium. Really does. But I wouldn't do the premium with it where it is. Okay, Hassefeffer. MU, big debt load. Check. Marathon is a no, no dividends. All right, CP. Jimmy, UPS. I like UPS. UPS. 135.67. 135.67 to 136 ooh, nice, 1%. Gotta like it. I like the number, okay? Here's your high. Here's your low. Here's where it was. Here's where it is. This is the direction it's going. It's 135. Okay, nice. Let's take a look at the 90-day. What's the 90-day telling us? Up, down, right? Interesting. Okay, let's look at the 30-day. Last 30 days. 30 days ago was our 30-day high, right here. Our 30-day bottom was 3 weeks ago. And then she bounces back up. and then she pulls back down again. One day to the upside. One more day to the upside, and that would be an invitation to jump on in if you like UPS. That's always comes down to that one question. Do I like this company and do I want to own it? Because remember, rule number one never ever changes. Never buy something you do not want to hold long term. Okay, I have no problem with UPS. I like UPS, especially when they pay nice premiums. Yes, Mara has no dividends, but fat premiums, and James has done that before. Yes, Secretariat, I have done Mara before. There are, every once in a while, there are exceptions to the rule. Do stream on other platforms too? Yes, I do. YouTube, Facebook, Instagram. I'm waiting to get some more cameras to do. I'd like to do LinkedIn, Rumble, and Truth Social, and Twitter. I like to do those 4. Then I'd have 9 cameras in front of me because I don't know how to use this stupid software. If I knew how to use the software, I wouldn't have this issue. Anyway, besides the point. What about TSE? TSE. Nope. Couple of reasons. Reason number one, first and foremost, it's monthly. Doesn't have weekly options. Second, $2 stock. Tell me, honestly tell me, all right, you honestly think a $2 stock is going to have 20 years of increased dividends? Scalp or swing trade? Give your thoughts. Vic, my thoughts is whatever works for you. That's it. Whatever works for you, perfect. Okay, I don't tell people what to trade. I don't tell them how to trade. If you're trading, if you're scalping, if you're swing trading and it works for you, great. Isamic. I would have to own 1,000 shares to make money at 1%. Not necessarily so, Isa. Okay? Now, your definition of money, my definition of money may be different. Now, my grandson started his account with $50. Of course, he's 4 years old. He has different financial requirements than you and I. Okay? Excuse me for a second. Still trying to get rid of that cold. Alrighty, so 86. Vic, this strategy is covered calls on dividend stocks for 1% per week. Yep. Make 100 shares to sell one covered call. Yeah, 86 is right, and it really depends on what it is you're looking for. Or maybe 0.01%. Yeah, 0.01%, I wouldn't do that. Okay, Isamic, you're getting it all wrong. All right, I'll give you a quick example. I share 2 accounts with you guys. One account has $100,000 in it. $100,000. 1% of $100,000 is $1,000 a week. I spend 10 minutes a day on that account. 1 week, 10 minutes a day is less than an hour. Less than an hour to equal $1,000 a week. Okay, now, it took me a while to get here. Okay, how long did it take me to save up $100,000? It took me a while. It did. Okay, but at 1% a week, that $100,000 account brings in over $1,000 a week. Now the other account has $100,000 in cash and $100,000 in margin money. That brings almost $3,000 a week. That's a hell of a lot better. But it's margin, it's a lot more risk, and I don't really suggest you do anything with margin until you understand the risks, because there are risks involved when you're trading. Okay, covered calls is one of the safest trading strategies there is. That's why I continuously do it. Okay, the trading strategy was created for my 9-year-old daughter in 2008. It had to be simple, safe, predictable, consistent, and no way for her to lose. Okay, that's what the trading strategy was created for. I give it to you guys for free. It makes about 50% per year. If 50% per year is not okay with you, then this is not the right place for you. Okay, now, a 9-year-old little girl, she's not a Mensa student, just an average everyday girl, is what it is. Okay, she's going to be 25. Sorry. She's going to be 25 in a couple of weeks. Where did the years go? My goodness. All right, anyway, let's keep going back to where we were. Wouldn't be comfortable owning. Okay, but you can roll week to week if the stock drops. Never open a covered call on a stock you wouldn't be comfortable owning. Well, that's correct. And Dana Linden, is that right? Uh-oh. I'm missing a couple questions. GM, ooh, I like GM. Stutz, GM, huh? GM is one of my fallback companies. And it looks rather interesting at the moment. Yeah, I probably wouldn't do GM at the moment because it's getting kind of high. My humble opinion. Okay, right now the current price is $46.75. The 47 is going for 51. That's over 1%. All right, look, she's bouncing off of this low, going here. She might be turning back down. I don't know. Let's take a look at the last 30 days. Okay, 30 days ago, here we are. A couple days later, we're at a 30-day bottom. Shoots on up, finds the top right here, almost at 49.40. Drops back down, shoots back up, drops back down, shoots back up. Right here, I'm a little bit conflicted with here. Okay, you got 3 days to the upside. Last Friday, Monday, Tuesday, Wednesday was a down day, lower high and a lower low. Okay, what does that mean? It means I'm a little uncertain with its direction. Okay. Jimmy, we already did Bristol Myers Squibb. CP, so your dividend rule isn't in stone. Well, here's the thing, okay? Now, when old Warren boy has a stock that doesn't quite fit the parameters, I let it slide. Because Warren has been invested a lot longer than I have, and I'm pretty sure all of us here will agree he has more clout than I do. So if he says it's good enough, then I buy it. And I believe Warren did have, I don't know if he had Mara. I know he had Paramount. I don't know if he had Marathon. But I know there was a reason why I bought Marathon, and it wasn't just the fat premiums. Okay, Isamic, I haven't sold anything yet. Well, okay. Hasefefra, Mara straddles candidate. Professor told me straddles are insane. Yes, they are. But here's the thing. There are lots and lots and lots of trading strategies. Matter of fact, let me just open this up and I'll show you. Okay? Here's our list right here. You ready? All right, you got single options. You got vertical, back ratio, calendar, diagonal, straddle, strangle, covered stock, collar, synthetic, combo, butterfly, condor, iron condor, vertical rule, collar with stock, double diagonal, unbalanced, deep and wide. And then it gets a little deeper. Check it out. Unbalanced butterfly, unbalanced condor, unbalanced iron condor, unbalanced vertical roll. And then you have a double diagonal, double calendar, a straddle strangle swap. It goes on and on and on with all the different trading strategies there are. Why do I teach this one and only this one? Well, this one I'm considering as a stepping stone for people to get their feet wet, so to speak. It's simple, it's safe, it's predictable, and it's consistent. Okay, great. Once you perfect this, this will give you 50% per year return. Once you perfect this, then you can move to one of those other ones. Because yeah, he's right. The what do you call it? The calendar spreads, those are awesome. A diagonal spread, that's awesome too. Okay, the iron condor, the vertical roll, the butterfly, all those have their place. But you have to sit in front of the computer a little bit longer, and it takes a little bit more to perfect them. Okay, this one here is just a stepping stone to get you started. All right, it's safe, it's simple, it's predictable, and it's consistent. And if you're right, which hypothetically you should be, you should get at least 30 to 50% per year return on your money. Okay, and that's only for like 10, 15 minutes a day. Okay, but yeah, they all work. You just have to put more time and effort into it. The more time and effort you put into it, the more you make. Then you have to decide, how much time do I want to spend in front of my computer? How much money do I need? There's a huge difference between how much do I want and how much do I need. Okay, right now, 10 to 15 minutes a day for me, I get my needs met. Not my wants. I mean, hell, I like to get a private jet and fly to Paris for coffee. But I don't need to. Big difference. All right. Holy cow, 26 more questions. Thoughts on Uber? Okay, there's my thought. It's a no. Do you analyze DX? What the heck is DXY? I never heard of it. So if I have to say, what the hell is it? Never heard of it. Yeah, sorry, that's a no. Sure, you're just waiting for me to say that. But I have been losing on some. Okay, Isomec. I can't help you out. I have no idea who you are. I have no idea what you're doing. I have no idea what you know. I just teach what I am doing. Okay, what makes sense to me. I can't tell you what to do. You got to figure out what is right for you. I personally like good quality dividend stocks. I like to buy them at a certain price. Here's an example right here. 1870. If I buy it at 1870, I want to sell it to someone else at 19. It's going to give me 4 cents. 4 cents is crap. I wouldn't do it because the number just doesn't work for me. Let's pull up Macy's real quick. Macy's 1814. If I sell the 18s, I can get 42 cents a share. I can go to the 1850s and get 23 cents a share. Both are over 1%. I like over 1%. Those numbers work for me. That makes sense to me. All right? Then I take a look at where is the stock currently. Last 30 days. I like the last 30 days the most because it gives me a good idea of where it's going in the next couple of days. Okay, here we are, 30-day high 30 days ago. Down, up, down, up, down. Look, now she's going to the upside. I would really like it if Macy's opened up higher tomorrow. That's an invitation. Macy's is on my list for tomorrow, and it's on my list for next week. I just like Macy's. They just give me 1 or 2% every single week. Now, we're in week number 27. If you go back and look at my history, I must have had Macy's for at least 18 weeks this year so far. Okay, Hassan Pfeffer, it's a gamble. Can you work if you're expecting a huge move in either direction? Yeah, he's right there. I like consistency and predictability. Will WBA ever recover? Okay, so that's a good question. Will Walgreens ever recover? I'd like to think so. Well, here's my reasoning. Number one, it's over 100 years old. Number two, they have 8,500 stores. 8,500. They're dropping 450. The last I read it the other day in an article, 150 here in the U.S., 300 over in Great Britain. It just goes to tell you we're a little bit better off than they are over there. If they got 300 stores they got to close, well, that's not a good thing. Now, you get rid of those 450 stores. Uh-oh. Hit the wrong button. There we go. So I like to think it will. I said, Mike, don't buy garbage. Buy quality stocks. CP. Awesome. Awesome point. Don't buy garbage. LinkedIn. Yep. I just got to get the approval for LinkedIn to do live shows on LinkedIn. Do you think WBA will recover? Yeah, we already talked about that. I need to sell. Maybe you do, Isa. What stocks do you hold? CP. Oh, he's talking to him. Someone else. Ooh. Goldman Sachs, you say? Now, Goldman Sachs is on my personal list. It's going to be a no. Terribly sorry. Why is it a no? Here you go. It's at the 30-day high. I didn't even look at the numbers. Okay? It's at the 30-day high. What happens at 30-day high? Well, for me, it's profit taking because it ain't a profit until you take it, and nobody ever went broke taking profits. So, Goldman Sachs, for me, look at this. 1, 2, 3, 4. It's at a 30-day high. Look at all that profit from 442 to 470. That's $30 worth of profit. A little bit less than 10% in less than a week. Yeah, I'm out. Thank you very much. Have a nice day. But if you like it, I would never, me personally, never buy it high, waiting for it to go higher. I don't do the thing. Okay, I don't want it to go lower. Well, kind of. I want to, never mind. No, I don't buy it at a high. Sorry. Goldman Sachs is at a high. That's a no. That's a no. Ha ha ha. He has Oreos and chicken nuggets. Okay. 86, please. All right. Some margin calls. Yeah, I hate margin calls. But they happen. It's all part of the game. I missed some questions. Okay. Teaching for free and people make money, make them loyal forever. They would want to learn all strategies. Yeah, Dave, you're right. Michael David, you're right. I mean, all right, look at it this way. He's got an excellent point. Michael David's got an excellent point. If I am showing you how to get a safe, predictable, consistent 1% per week, what strategies do you think I have up my sleeve that I'm not showing you here? Well, I tell you, I have a couple of them that make 100, 200, 300% per year. I ain't teaching them here for free. Like I say, I do have a morning trading group, all right? And I'm also going to be opening up my own trading fund. All right, it's going to be insurance dedicated fund. If you guys ever know what an IUL is, I'm looking to get to the VUL. It's a long thing, but I'm actually laying the groundwork now so that in 2 years, when I get the approval to open up my own personal fund, I'll have all this to look at for people to say, hey, what's this guy's track record? And you can actually come in, take a look at my own trade. So let's wave to our future selves. Hi, because these videos are going to be saved forever. And my grandchildren, my great-grandchildren will be able to say, hey, that's Papa G from decades ago. Anyway, that's where we got our start. So yeah, this has many reasons why I'm doing this. Okay, number one, I'm looking for a small group of people that want to trade on a consistent basis. So I do have a morning trading group. Okay, it's $100 a month. You guys want to come in, trade, watch exactly what I do, because the very first half of the the very first half of the podcast is me doing my podcast, me doing my live trades, and you get to watch every single trade I do. After the podcast, I unmute the microphone to say it's open questions, and we'll stay on. I will stay on until you guys are done asking questions. So if you want to learn it, and if you want to get in, yeah, for $100 a month, you get my attention for over an hour a day, Monday, Tuesday, Wednesday, Thursday, and Friday. You get to watch exactly what I'm doing. If you have any questions, I'll be more than happy to help you out. That's what I'm looking for, because eventually, now I've committed myself to continue doing this for the whole year. Now, imagine this if you will, because for those of you new here, I've been doing this since the first week of January 2nd, okay, my very first podcast, or broadcast. They are watching you, yay! Okay, so my very first broadcast was January 2nd. I've been here every single night for 2.5 hours since the beginning of January. I've only missed 2 nights. One, I was sick as a dog. The other one, I had to take someone to the hospital. Okay? But I did sign in those nights and say, hey guys, I just can't do it. Yakking all over the place. The other one said, hey guys, I can't do this. I got to take Kathy to the hospital. Blah, blah, blah. Okay, but I've been here every single night for 2.5 hours. All right? Haven't missed a night. So I'm committed to do this for the rest of the year. At the end of the year, I will then decide whether I want to do this again next year. But this is your opportunity. You want to learn how to trade, safe, predictable, consistent, 1% per week. I got stuff up my sleeve that I don't do here that's a lot more profitable. But this one here, this strategy here that I'm sharing for free, yeah, it's simple, it's safe, it's predictable, it's about 1% per week. Hey, James, can we still do the 1% without doing covered? I honestly don't. You could, but I don't know why you'd want to do it. Okay, now Champ Sexy, I do it because it's a safe trade. Okay, now the covered part is worst case scenario. When it's not if, it's when the stocks go down, I will continuously get an increased dividend. If you're trying to get 1% without being covered, you could, but it has a lot more risk to it. Okay, so remember I said about the strategy? It was created for my 9-year-old. It had to be simple, safe, predictable, consistent. No way she could lose. That's number 5. No way she could lose. Okay, so buy a good quality stock. Hold on to it if you have to, but that's not the intention. The intention is to buy it, collect your little profit, move on to the next one. It's like a revolving door, Rolodex, or merry-go-round, whatever you want to call it. But it's the same stocks over and over and over again. Very rarely do I ever bring new stocks into it because I've already know what stocks pay dividends consistently increasing every single year. Why would I want to look at anything else? But that's just me. Okay, some people go, all right, this is great, and let me move on to something else. Fine, that's great. Sandra, hello. Sandra said hello. So, think about it. Okay? For 10 minutes a day, you can get a 50% return. Now, if that's appealing, great. I have found that people spend more time planning a family barbecue for a weekend than they do their personal finances. Okay, now we're all going to retire at some point. You got to figure out, where is my retirement money going to come from? Am I going to trust the 401k dude who's giving me, what, 4 or 5% per year and charging me fees? Or do I want to take responsibility for my own money and be my own investor? Because you know everything you need to know. You know a good company when you hear one. I mean, let's listen to some of these. Hold on a second. All right. Cardinal Health, Comcast, American Express, JP Morgan, Lennar, Bristol Myers Squibb, Cisco, General Dynamics, General Electric, Verizon, AT&T, GIS, yeah, General Mills, MasterCard, AbbVie, Abbott Labs, Hormel, PNC, Lowe's, Caterpillar, Pfizer, Home Depot, Clorox. Come on, you've heard of all these companies before. I'm not buying crap. You know, you guys want to see something funny? This is this week. Okay, so not a whole heck of a lot here. But take a look at this. Here's last week. Okay, look at all those stocks you guys had me take a look at last week. Okay, the week before. Okay, look at all of them. The week before. Okay, the week before, the week before, the week before, the week before, going all the way back to January. Okay, I look at hundreds and hundreds of stock every single week. But there's only certain ones that I personally invest my own money in. Here they are right here. Comcast, incorporated in 1964. They have over 64 million people writing them a check every month. 64 million people writing them a check every month. I don't think they're going anywhere. Cardinal Health, MasterCard, General Electric, American Express. You guys grew up with these names. Okay, I know each and every, I have no problem whatsoever buying one of those and holding on to them forever. I don't want to. I want to buy them, get my 1%, say thank you, see you in 90 days. Because this is just one list here. This is just for the month of July. Okay, let's go back. Hey, here's June. Look, NEE, Nordstrom's, NEM, Halliburton, Heinz Ketchup, Baxter, eBay, GLW. Oh, come on, GLW. Corning, Bank of America, General Motors, Kimberly-Clark, Pepsi, Waste Management. I can go on and on and on. And this is just the month of June. Okay? Look at the month of May. Same thing. Intel, Ford, Kroger, Target, ExxonMobil, ADM, Aflac, Walgreens, Johnson & Johnson, 3M. All right. I'm getting all worked up again. Okay, I only look at good, decent companies because they have increased their dividends for more than 20 years. So they're profitable consistently. Most companies don't make it past 3 years. 1 in 100 don't make it past 10. 1 in 1,000 make it to 20. Okay, so 20 years or more of increased dividends. That means they're profitable 20 consecutive years, year after year. Why would you put your money anywhere else? What the hell are you thinking? I like that phrase, what the hell are you thinking? All right, let's go to another one. Hey, James, can you still do 1%? Yeah, you could, but not me. Lockheed Martin, yep, that's on the list. Got it, thanks. Which stocks do you own for dividends? Okay, and you're new here. Okay, I don't really like to collect dividends. I do collect them, but it's not my focus. My focus is a safe, predictable, consistent 1% per week. I like to get those through premiums. Premiums are right here. Here's Goldman Sachs. Goldman Sachs, 468. If I sell the 470s, I'm getting 495. That's over 1%. It's Goldman Sachs. You know who they are. If I buy it at the money, what they're asking for first thing tomorrow morning, $468.90. The closest strike price is going to be $469, which they don't have, but they do have a 470. And a 470, I'm getting $495. And $495 on a $468 stock, that is over 1%. It is actually that simple. How do you figure it out? Simple. You take the decimal point, you move it over two places. It's at $469, $468. You move it over two places, it's $4.68 is 1%. I'm definitely jumping in, and James, 1% a week is good enough for me. Joey, how are you doing, Joey? Joey Levi. Joey, if you really want, send me your number. I will give you a buzz. We'll sit, we'll chat, see if it's for you. See what you know, see what you want to know. You know, go from there. All right. But, I didn't say this. I haven't said this yet. Be aware there are over 25. We found another one. 25 imposters. I'm catching up to Calvin Hill. Calvin Hill's got maybe 100 people pretending to be him. Okay? Now, if you look at my profile, you'll notice I'm only following 2 people. Okay, I got like 15,000. I really don't know. But I'm only following 2 people. Now, I also say here live, if you really interested, you really want to talk to me, send me a phone number. I will give you a call. Okay? Seriously, I will give you a call. Secondly, I don't use, hold on. I don't use Instagram. I don't use, what's that other one? WhatsApp. I don't do cryptocurrency. I don't do Forex. I don't do Bitcoin. I don't do futures. I do dividend stocks only. That's it. What you're hearing me saying is the only thing I do. And I do not take money from people. Now, I do trade other people's money for them, but you actually have to come and meet me in person. Okay? No, I don't take money from people. Okay? You can sign up for my my membership site and you can buy my books, but yeah, I never ask people for money. So if you get an email, a text, or something like that, people saying, hey, I got something great for you, this is awesome. Yeah, that ain't me. Okay? And if you think it is me, come back here to the live, because you're hearing me now, you're hearing my voice, send me your phone number, I will give you a call unless you live out of state. I'm not out of state, out of the country. Okay, then we have to do a Zoom call. And I have no problem with that either. You know, I'm here to help people out because I just want to screw it to the old man because we've been lied to long enough. Me too, I like Messi. M-E-C-Y. I have no idea who Messi is. Well, let's find out. M-E-C-Y. No such thing. Sorry. Hassan Fefa. Right, thanks. Okay. Calm, courageous. Thoughts impact on oil agreements ending on U.S. dollar and the rise of BRICS. Ooh, someone's been in the news. Someone's been paying attention to what's going on. All right, let me see if I can put it to you this way. This is my take on the whole thing, okay? Now, I'm not 100% familiar with foreign relations and any crap like that, but I do know, okay? This is what I do know, all right? I gotta take a deep breath for this. This is gonna be good and long. You ready? Now, we Americans, we're a fickle little bunch. We don't like to be pushed around. They can only push us around so much before we put our foot down and say, oh, hell no more, it's gotta stop. Here's the thing, okay? The stock market has been around for over 400 years. You have companies that we're looking at, okay, that have been in business for over 100 years. General Electric, General Motors, Ford, AGI, what is AGI? AIG, Bank of America, Wells Fargo, Colgate, Procter & Gamble, Philip Morris, and dozens of others. Been in business for over 100 years. So what does that mean? That means they've seen World War I. They've seen World War II. They've seen Korea. They've seen Vietnam. They've seen the stock market crash. They've seen the Great Depression. They've seen the oil embargo of the 70s. They see the dot-com bust of the 2000s. They've seen the Y2K crap. They've seen Corona. They've seen the crash of '08. and yet they still consistently increase their dividends to their shareholders. Go figure. Now, can you really picture a world where Coca-Cola no longer exists? Pepsi? How about Ford, Wells Fargo, General Motors, Procter & Gamble, Colgate-Palmolive, Philip Morris? Cigarettes, when I was growing up, they're like 50 cents a pack. Now they're what, 5, 10 bucks a pack? And people still smoking that crap. They're not going anywhere. All right? But here's the thing. Yeah, things may change. I mean, you've already seen it with the dollar. Is everything getting more expensive, or is the value of our dollar decreasing? Think about it. When I was in high school, okay, 2 hours of my time, I think I was making what, $3 an hour back then? 2 hours of my time would fill up my gas tank. Nowadays, 1 hour of my time fills up my gas tank. Well, I know a little bit more now than I did back then, but it's the same thing. Take the time what you get per hour, right? Now let's say you work at McDonald's and you're flipping burgers, and you get the minimum wage, which in California is $20 an hour. Okay. If you drive an economy car, 2 hours of your time should be enough to fill your gas tank. Think about it. Okay? Is everything increasing in value, or is the value of our dollar decreasing? All right? When you were in school, or you just got out of school, how many hours did it equal to buy a loaf of bread, a gallon of milk? Okay? A burger and fries and shake at McDonald's or Burger King. Okay, now 1 hour of my time it surpasses all that. So it's all relative. You know, I think the value of our dollar is decreasing. You know, not anything else. And anyway, besides the point. Let's keep going. Jam sexy, but the stocks expires by midnight. Blah blah blah. Vertical spread bad. Yep, something like that. All right, Jam sexy. Without buy the stock, if it expires in the money or miss strike, and you do, the vertical spread bad. Yeah, I don't like. I already talked to him about that. I don't like doing something uncovered. Walgreens and TikTok. Hassan Pfeffer. Okay, I'm not quite sure what you mean by that, but okay. Tom Powell. All right, Tom Powell. What happens with the stock you own? Black Storm Rider. Hey, how you doing? Where we go? What happens with the stock you own drops and you can't sell a covered call at a decent profit? All right, Tom Powell. Thoughts on impact oil agreement against U.S. and BRICS? Yeah, we already talked about that. Here's my thought on that one. If you're concerned the stock you're going to buy is going to drop in value, fine, buddy. How are you? I am doing wonderful. Thank you for asking. If you're worried about the stock you buy is going down, don't buy it in the first place. Never buy something you're not okay with holding long term. If they have 20 years of increased dividends, that's what you're looking for. Okay, don't go in thinking, oh, I'm only going to buy this for a day or two and then I'm going to get out. Okay, never buy something you're not okay with holding long term, because you never know, you might have to. Now, the longest I've ever held anything was 9 months, and that was Kimberly-Clark. Not that I wanted to. Okay, I bought it, she dropped. Okay, she turned around, she came back up, and I finally got out at a profit. But I held it for 9 months. In that 9 months, I got 3 dividends and like 20 premiums. I made a nice amount of money off of it. But it did tie up some of my money that I could have been getting at, a better premium. But it is what it is. It's a game. It's kind of like Monopoly. Once you learn how to play it, you know how to pick the right stocks. Now, when I say by the right stocks is never buy something you don't want to hold long term or something you don't understand. Okay, now some of the stocks you guys rattle off, I have no clue who the hell they are, and it'd be a definite no because I don't know who they are. Okay, the numbers have to make sense to me. I have to know who the company is. Goldman Sachs, I know who Goldman Sachs is. Okay, I know who the company is. I don't have a problem with Goldman Sachs. Thoughts on impact? Yeah, we already did that. 78 questions. Holy shit, Bristol Myers Squibb. We already did Bristol Myers Squibb. Bank of America, BAC. Bank of America is going to be a no. Why is it going to be a no? Take a look at it. It's at an all-time high. Nope. Sorry, next. Things you could buy a deep in the money call, set at the money put. Call if it doesn't have to. Yeah. All right. Michael David, yeah, you're right about what that. GS volume tapering also, okay. Bank of America looks good. No, it don't. Crap. I missed. He said if I hit the wrong button, they all go, and I miss all these questions. Legit Savage, yeah, I'm retired. I don't have to work anymore. Are you in finance? If so, what is your title? They call me Mr. Gardino. I got Legit Savage. Okay. Thanks. I'm looking to become a financial analyst. Should I get a CFA? Dude, you can do whatever you want. I'm in oil, natural gas too. The oil agreement changed. Is a tough, but oil is not going away. No, it's not. There's only one James. Hey, thanks, Doc. Just retired this year, 39. Good for you. That's awesome. You know, I tried retiring in my 30s. It was too freaking boring. After about 2 weeks, I said, fuck this, I went back to work. Because I was the only one my age anywhere. I come to Florida, I slept until I was done, got up, go lounge by the pool for hours, got done with that, had lunch, went out, had dinner, and hung out. It's so freaking boring at 39. Okay, who the hell do you know at 39 that has nothing else to do? No, everybody's working. True that. Cal, are you listening? Yep. Yes, Econ, Savage, you have a bachelor, okay. Target University. Okay, but do you keep any stocks in your portfolio for long? I'm confused. Doing it covered, you don't keep. Okay, Champ Sexy, you're absolutely right. I don't keep anything. Right now, what I have in my account that I've had the longest is AEO. Now, I've had that since the beginning of April, the whole quarter, 3 months. We're going on month number 4. Okay, I still get a nice premium for it every week, so I have no problem holding on to it. I went to CSU, all right. Not quite sure why we're talking about colleges, but all right. Neon Dion, happy 4th. What's that? No idea what you're talking about. Legit Savage messages me, an analyst in Dallas, blah, blah, blah. Okay, you guys carrying a conversation without me? Do I really need to be here for this? All right, Champ says the goal is to be in and out of the stock 1 week. That would be perfect. Selling the premium above the clip. Yep, that's good too. No, that's short of California State University. Why, Queen J? I have no idea what Queen J you're talking about. You keep the premium and end week all cash. Yep, that'd be awesome. Gotcha. Dion went to Colorado anyway, not CSU. I just remembered. Okay, gotcha. Money is printed like toilet paper. If you save your money, you don't invest your... Okay. Now, CP, I'm going to agree with you in that. I saw an article today where they're systematically trying to destroy the U.S. because they want to take over that one world government scenario type thing, and the Orange Man wants to stop them from doing that. Opportunity cost. Yep, you lose money at opportunity cost once you have money tied up for a long period of time. I got 12 more questions. Yes, but even discounting that, inflation eats away at your savings every day. Yeah, CP, I don't have any money in my savings whatsoever. 98% of all my money is invested at all times. I think I have maybe $3,000 in my bank accounts, because I have several of them. But 98% of all my money is invested at all times, because why wouldn't it? If I need it, all I have to do is just get in, sell something, and there you have it. James, what was your profession? Ooh, I had several professions. I owned a manufacturing company for years. I was actually a CEO once. Can you imagine me being a CEO? Yeah, I was. 13 years, owned my own manufacturing company. It was cool, too. It was fun. I actually enjoyed it. The only reason I got rid of it was the divorce. Divorce, that happens. Take you to lunch at Pops so we can have a drink. All right, Steve, I'm in Sarasota. You can DM me you want. We can go out somewhere. And I'm probably heading up to Mass. My best friend's father died, so I'm gonna be heading to Maine, Massachusetts, and then heading up to Maine at the end of the month. I think I'm taking my boys with me. That'd be fun. We're gonna live broadcast from up in Maine. That should be fun. Big Deck. How did you make enough to retire at 39? Oh, no. I didn't say I retired at 39. I said I tried retiring at 39. Bored as hell. It was boring as hell. It's even boring now. You know, I'm 60. There's not very many 60-year-olds that are retired. And I live in Sarasota. It's God's waiting room. Okay? And, you know, I don't do the nightclub thing. I don't go out drinking all the time. I'm a strange person. I like a nice, quiet, peaceful life. I'll go outside and I'll watch the grass grow. I get enjoyment out of that. No, I like hanging out with my grandson at the moment. Whoops. Uh-oh, I'm missing some. Queen Jail, I saw that one. Okay, where are we? All right, Legit Savage. Putin, need to follow back, blah, 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 that. How to get dividend stocks. Susie Fly. Oh, Shoozy Fly? All right, anyway, how do you get dividend stocks? Simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there, you can search on Google. Go to Google, Dividend Kings list 2024, Dividend Aristocrats list 2024, Dividend Champions list, Dividend Contenders list, Warren Buffett's list 2024. It will actually give you a downloadable either a PDF or an EXE file. Jimmy, Lowe's. Ooh, I didn't do Lowe's this quarter because I didn't have any money for Lowe's this quarter. Lowe's, check it out, $213.80. Okay, if I was going to buy it $213.80, look at the $214 to $215s. Okay, I could get the 1% out of that. Look at the chart. Here's the high, here's the low, here's where it was, here's where it is. Let's take a look. Here's the high right here. Okay, so the high right there, she drops, recovers, drops, recovers, drops, recovers, drops. One day to the upside. All right. So one more time to the upside, and that's a good time to jump in. If you like Lowe's. I love Lowe's. I do. I usually buy Lowe's every quarter because Lowe's pays its dividend, I think, the 3rd week of the quarter. We're in week number 1. So the 3rd week of the quarter, Lowe's pays its dividend. Where is it? Where are we? Lowe's right there on the 24th. Check it out. July 24th, Lowe's paying $1.15. So when do I want to jump into Lowe's? I want to jump into Lowe's on Monday. Well, tickle me pink. Look at that. Yesterday or Tuesday was the low, the 30-day bottom. Okay, we love 30-day bottoms. Huh? Let's isolate this bad boy. Take a look at this. Okay, 30-day high was 2 weeks ago Friday. Big drop, recover, big drop. Here's your 30-day bottom on Tuesday. This Tuesday just passed. One day of the upside. It's all red, but it's still one up day. What do I mean? Well, it has a higher high and it has a higher low. Okay, so it is an up day. Even though it's red, it's still an up day. Okay, it's a higher. So, hypothetically speaking, if tomorrow she's green, that's an wonderful time to jump in because it's got its dividend in 2 weeks. Casey, we're here. Okay? We got one more day for this week, and this is the optimum time to buy Lowe's. Okay? Lowe's is right there. 2 weeks on a Monday. Okay? Okay, get a premium, get a premium, get a premium, and a dividend. You just tripled your return. Because most people buy the stock and just get the dividend only. Well, the dividend for Lowe's is $1.15. Okay, so you get that every 90 days. But in this instance, I can get the premium, the premium, the premium, and the dividend. but I'd prefer just to get the premium, because what is the premium? Let's take a look. 213, 212, 320. That's more than the dividend itself. Why would I want to hang out for the dividend when I can just collect the premium? Buy it for a certain price, sell it for a certain price, collect the premium over 1%. Yes, I'm good. That's what I'm looking for. Safe, predictable, consistent, and Lowe's. Lowe's has been in business for over 100 years. Tell me you don't know who Lowe's is. Seriously, you got 10 questions, and then we're done for the night. CP, James, what was your profession? I was the owner of a manufacturing company. I manufactured fiberglass products. All right, take you to lunch at Pops when you drink. Yeah, Steve, DM me your number. Give you a buzz. We'll go hang out. We'll talk stocks. All right, James got that work ethic. How did you make enough money to retire at 39? Yeah, it was fun. I had very low bills. How you doing? I'm doing great. Tyrese, how are you? All right, what did you make in your company? I made artificial coral reefs for museums, aquariums, and very, very, very rich people. Saw M. Where were we? Saw M has been negotiating with a buyout offer. Just raised to 24. Tempted to commit 50%, not 25. Wow. Renaissance man. We've had buyout offers before. I mean, we looked at one. Was it Macy's? Yeah, it was Macy's. Macy's, because I think at the beginning of the year, they were toying with it, and Macy's was around 20. And Macy's said, oh, hell no. In that case, we'll just buy back our stocks at 24. So the people may have raised their offer then. That'd be good. All the time, CP. All right, Steve, Tesla, plus or minus? Yeah, I don't do Tesla, sorry. Style, sorry. Residence, and that's not a bad idea. Bid is 24. Price is around 17. Stock is safe, yeah. Channel with great dividends to wait it out. Explain premium. It's 11:30. I'll have to explain it another day, because we're done. What is Paramount? That thing's been dangling forever. Well, Paramount's another one of those companies that has a buyout offer. I think they're on the second or third buyout offer for this year. Something must be going on, because why would they be looking at the third company to buy them out? All right, all that being said, this is James from Dividend Stock Talk, brought to you by 10-Minute Trader. I'm out of here for today. We'll catch you again tomorrow. Now, tomorrow is Friday. Okay, so that means there's no trading group tomorrow morning, but we will be checking in at 3 o'clock. 3 o'clock. So that way we can check to see where our positions are. I'm 7% on Paramount. Good for you. Cool beans. All right, so you guys have a great night, and we'll catch you again tomorrow night. Done over here on Instagram. Bye. Done over here on Facebook. See you later. Done over here on TikTok. Bye, guys. And YouTube. Catch you guys later also.